my name is Daniel Wu and welcome to this week's Video Insight. In this video, I thought it would be helpful to provide an update on Apple as the company continues on its advance towards a $1 trillion market cap. Specifically, I wanted to talk about Apple's services business, which has long been the foundation of our variant perception. Up until recently, Apple's share price lived and died by the number of iPhones it shipped each quarter. This was not only an incredibly short-sighted view of a high-quality business, it also completely ignored the value of Apple's customers and the services business they were driving. It was only in the last 2 quarters that Wall Street analysts and the market started to appreciate Apple's services business, and even then, only because the iPhone X failed to ignite a new iPhone supercycle. Now, fortunately, for investors in the Montgomery global funds, the market's inability to see beyond the next quarter offered us numerous opportunities to increase our investment in Apple at steeply discounted prices. In the most recent quarter, Apple's services business grew 31% to over $9 billion for the quarter, or a run rate of $36 billion a year. This was the fastest growth rate since 2013, and off a much larger base. Underpinning this accelerating growth is 1.3 billion active Apple devices globally, a figure that CEO Tim Cook says is growing in the double digits. Cook also revealed that Apple's paying subscribers reached 270 million, up 100 million from a year ago and 30 million from the previous quarter. Now, to put this subscriber count into context, consider that Netflix has 125 million global subscribers, over 100 million households are members of Amazon Prime, and Spotify has over 70 million paying subscribers. These subscription services all cost around $120 per year. While Apple's implied service revenue per subscriber is higher at $140, it should be noted that not all customers who spend money in the App Store count as subscribers. What is more insightful is that, by our estimates, Apple's services revenue per active device is less than $30 a year, and assuming just under 2 devices per customer, revenue per customer is around $50 a year. Now, this suggests that there is ample headroom for Apple to grow its services revenue in the years ahead. The other benefit of Apple's services growth is that services gross margin is much higher than the overall blended gross margin. Wall Street analysts estimate services gross margin to be between the high 50s and the high 60s, compared to overall gross margin of 38%. Incremental services gross margin is likely to be even higher, as the incremental commissions that Apple receives from the App Store are likely to fall straight to the bottom line. Although the market has finally caught on to the power of Apple's services business, our expectations framework suggests that at the current share price, the market expects services revenue per customer to have plateaued for at least the next 10 years. To the extent that one believes Apple's services revenue per customer can close the gap with other popular subscription services, the stock may still represent compelling value. Well, that's all for this week's Video Insight. As always, don't forget to follow on Facebook and Twitter. Thanks.